Welcome to Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. Monday is the day to talk again every Monday with Mike Zuzolo. He is the top expert on commodities in the US, and apparently he got it right again, as last week he said that May would bring us better prices for our commodities. States are reopening. Some states like California are reopening faster than previously expected. And Mike recently has done a radio commentary bringing the Chinese economic results. Mike, how do you think all of this is impacted the commodity markets?
Well, we've set ourselves up, Luis, for a better price action heading into the very important Tuesday WASDE report by the United States Department of Agriculture. The numbers are going to be big. We know that. However, the expectations by the trade are much more supportive for the soybeans. To give you an example, the Bloomberg survey expectation on average carryover for what we're growing right now in the United States is about 430 million bushels. That's not bad compared to last year when we were approaching 800, 900, even talking about a billion bushel carryover of soybeans. That compares to about an average trade estimate on the Bloomberg survey of about 3.4 billion bushels in the corn for the new crop for what we're growing right now. So the trade has a lot of support underneath it from these soybean numbers. And this goes directly back to your question of China. China also released some very key economic import and export data on Thursday. Their exports were much stronger than even the Chinese analysts thought they would be. April exports came in at plus 3.5%. Even better for the commodities were the April imports that China purchased. The crude oil market looked at their number and saw that the crude oil imports were down 51%, but that was in dollar terms. And that was because the price fell so sharply in April. If you look in volume terms, China actually, their imports of crude oil only fell about 2.5%. That was very supportive of the energy markets this week. Their soybean imports were down 12% in volume, but that was mainly because Brazil was having difficulty getting shipments out the door to the Chinese. It wasn't really a lack of supply, a lack of demand. In fact, it was reported that COFCO was pulling state reserves of soybeans out of their domestic stockpiles to be able to keep the crushers well supplied. Things like coal, 22% better imports in April, iron ore up 11.5% in volume, and copper was up about 14% in volume in April versus April 2019. So this goes back to the narrative that we've been talking about, that if we can come out of this COVID and reopen the United States and reopen China and not have trade frictions in this summer, these next couple months, we could be back to close to pre-pandemic economic growth levels and get all of these unemployed people back to work. And it's going to be tough, but the possibility is very much there with numbers like we're seeing right here.
And where there could be the fastest upside reaction?
I think the soybeans. In fact, right before we went on the air today, I called several clients because we have a killing freeze coming into our U.S. corn belt and bean belt this coming Saturday, this weekend. And it normally would not mean much. However, we have a lot of aggressive plantings that you and I have talked about. And now the plants are starting to pop through the ground. We're seeing emergence in these newly planted corn and bean fields. A client in Indiana that I just spoke with said that about 45% of his corn had emerged and about 30 to 35% of his soybeans had emerged. And they are very nervous on the soybeans, especially because a couple hours of 28 degrees or below, and that usually kills the soybean plant. Corn probably won't be hurt as badly, but I would say in the corn, while the emerged corn may be just okay and fine and maybe burned off a little bit, if you've got corn underneath the ground and it gets that cold, and then all of a sudden there's a bunch of rain, you may not have emergence in corn. So we may have a supply side issue here as we go into the USDA report on Tuesday. That's going to be what really balances our market and really probably dictates how bad the market reacts to bearish supply demand numbers, or how they may see a dip or a price break to buy, depending on how bad the freeze is this weekend.
And what do you see at the hog market? Because the USDA announced this week that a lot of facilities are restarting in several regions of the United States. How hopeful would you be for the hog market?
Yeah, great question, because I'm very much gearing up to hedge or put floors underneath me in the hog sector as these facilities come back online. I think you've got a real situation where you have not liquidated a lot of the herd here in the United States that much at all yet. And you've got a lot of animals that are very heavyweight right now that the packers are not taking, the processors are not taking. One of my clients just this week told me that his packer in Illinois called him and said, "Don't bring your hogs in until I call you." And so I said, "Well, how long do you have with these pigs to be able to feed them out?" And he said, "Well, I've gotten in touch with my feeding supplier, and we can change the rations of feed so that maybe we've got 3 weeks that we can keep feeding before we'd have to worry about actually calling or euthanizing those pigs." So if these processors come back online, I think you have a lot of pigs that are ready to come to market. And I think your wholesale values here in the United States, like your cutouts, your hams, your bacon prices, those will probably fall pretty dramatically. And if they do, I think the funds will probably pull the plug and liquidate long positions as a result of that. So August hogs, for instance, Luis, we're hitting into those mid 60 price levels. I feel like that's a very good price level to get a hedge in place based upon supply demand fundamentals. So I'm very eager to get some hogs hedged in the next week or so.
Yeah, by comparison, Brazil has very similar situation. More, in fact, Brazil has a better situation because quarantines in Brazil were reduced. They took less time than compared to the US, and demand for hogs is already increasing again, and the exports were really high in the last weeks, and with the advantage that very few facilities closed in Brazil.
Hmm. So
So
you sound like you're very current on your hog marketings where we're backing up. You're very current.
yes. hmm And what can you update us about the weather in other locations?
Well, I think you have received some rains in the Black Sea region and in Europe, but I found it very interesting that the United Nations FAO came out with their monthly crop update for the month of May. And in comparison to their expectations in April, they took the wheat ending stocks minus China, all countries except for China, they took those down enough that those supplies and ending stocks for this new crop 2020-2021 crop year could be the lowest since the 2012 drought, the lowest since 2013. That matches up with my numbers. And so while the wheat areas of the Northern Hemisphere have benefited from some rainfall, it's not nearly enough at this point. And I think you probably have another 2 weeks or 3 weeks to be able to get enough rain in the Northern Hemisphere, including here in my state of Kansas, to be able to help the crops out. I think the crop conditions report this week for the hard red wheat here in the United States, the market misunderstood. They saw the good to excellent conditions go up 1 point, but they didn't realize the very poor and poor remained at 14%, and that compares to 8% last year at this time. I'd expect the very poor and poor conditions to increase pretty dramatically, Luis, if we don't get rains in the next 10 days. Our drought monitor here nationally that the U.S. government puts out was updated midweek this week. And while the overall area of drought declined, the areas that had drought, it worsened substantially. So I think that's indicative of those crops are not going to be able to come back if the rains don't come relatively soon. We're actually going to lose production permanently. And I think we're right on the edge of that. And I would say that all across the Northern Hemisphere, except maybe excluding China, where they have more of a pest issue and a bug issue and army worms and things like that, locusts and stuff like that. But from a weather standpoint, I think the Northern Hemisphere really needs to get some rains very, very soon, or we could see wheat supplies fall even more.
Yeah, and recently you have been telling farmers to wait for a better opportunity to sell corn or other commodities. What are you telling them right now? They should still wait?
Yes, I think we're going to have some rough road ahead with the USDA report. I don't know how much more upside we could get without USDA helping the market. In other words, it would be nice to see USDA come out with a supply number that was actually smaller than what the trade was thinking. I don't think that's going to happen, but if it would, I think that would encourage the market because overhanging the market right now are the negotiations and the relationship between the United States and China, the two biggest economies of the world. If they get into a trade war, how are we going to avert a deep recession in 2020? And that's the bottom line when it comes to the commodity markets. You're not going to get increased trade. You're not going to have these higher income families in the emerging markets be able to buy all this protein like they have the last 5 or 10 years. So I'm walking a tightrope right now. If we can come out of this COVID-19 and trade tensions go down because we come out of the COVID-19, then I think we can wait longer to get hedges in place. But I'm very eager, like the hogs, I'm very eager to get a floor underneath me in the soybeans because I see those in the hogs as the most sensitive to declining trade relationship between the United States and China. In other words, the pork and bean trade is what I call it. If we see U.S.-China negotiations get worse and worse, we open ourselves up to losing export business from China in the hogs and in the soybeans. And that goes back to that estimate by Bloomberg for the United States crop and the ending stocks. If the trade is already thinking about a 430 million bushel carryover in soybeans, how much smaller can it really get? So that may mean that the soybeans already have a futures premium in them, especially after that report comes out on Tuesday.
Yeah, and are you also really hopeful for improvements on wheat?
Yes, I think the cash wheat market is going to be where I do most of my hedging. I don't think there's enough premium in the futures market, but I think the supplies are tightening up enough that we should see some real basis plays here in the United States. And that goes back to our last conversation when you talked about the Mercosur and the relationship politically between Argentina and Brazil. It would help us a lot in our cash markets and our futures markets if we could get some exports into Brazil at the expense of Argentina. That would help us a lot, but the currencies are just not letting us do that quite yet.
Yes, by the end of the month, um, the Brazilian government is evaluating if there will be limitless entrance of U.S. wheat into the Brazilian market. So that can be really important.
Very, very important because that takes the spotlight off of China. That would really help. It's kind of like Mexico, Canada, Brazil. These are three major markets that if the United States could get more business of, it'd be less important to the trade about how the United States and China are treating each other.
Any other wise thought, Mike?
I would just reiterate the idea that I think we could have a market if we could come out of the COVID-19 with that summer grilling season, the summer driving season. Those things are very important to the commodity markets here in the United States. And I think worldwide, because the United States was the leader economically before the pandemic hit. They were probably going to be the ones that helped a rising tide lift all boats with their economic strength. If we weaken and we don't come out of the COVID-19 issue this summer very well, and we can't open up and stay open, I think that's going to be bad for the whole global economy, and it could be setting the stage for an issue that could be even worse than the Great Recession. And I'm talking globally too, Luis, when it comes to that. And I say that knowing that we are just very few steps away from Argentina defaulting right now. If the United States and China can't turn the world economy back around, and the COVID-19 gets pushed down by a vaccine or therapy or some type of science and medicine, it could be very, very tough on us, and maybe even worse than what we dealt with about 10 or 12 years ago. So it's a real tough issue right now. We're really what we would say in crunch time right now.
Mike, thanks again. Have a great week.
Thanks for having me, Luis.